person. It's like, okay, I'm in Canada, I've got some rental properties there. I want to expand my rental portfolio into the United States, specifically into Florida. I'm never going to use this property myself. I'm going to put in long-term tenants, and we're going to keep it from single family home or condo all the way up to a fourplex, is my understanding, as we discussed before, which would still not be considered commercial lending.
Correct.
So what does the process look like in that case, right? Can you still make an application as though you were going to live in it okay.
That's when it's pure investment and you're not qualifying with your income. If you qualify with your income from Canada, then you just buy it as a second home and that's it. What you do with it after is up to you. And then what you do, okay. Correct? Because the only reason why you would say it's investment is if you don't have enough income to qualify for it, so it can qualify for the loan for you. Now, the scenario that you're saying is something that's actually me and Vito suggest to clients all the time because it's something that Americans do very good, and it's leverage. So, for example, you have a client that has $1 million, right? And he wants to invest that $1 million here in the US. He can either buy one house or one condo, or he can buy 4 with the same amount of money. Because instead of buying one condo for $1 million, he gets $250,000, gives 25% down on 3 units, and he's got 4 units now with the same amount of money. And all 4 units, he would buy it with Plan B.
Okay.
So not Plan A won't do it. They will do one as a second home. Everything else would have to be investment. And then the other properties would be as investment where they qualify with the rental income that they have.
Okay. So then this is, it almost sounds like what we would term commercial lending, like even regardless of the level of units.
It is. It's almost like commercial lending for resi.
Right.
All 3 options, you can put in a corporate name, by the way.
So it could be, and this is going to be an entire extremely exciting episode, legal structure and tax structure, but you could have it with an LLC or a C Corp or an S Corp.
All 3.
Okay. Or an LP or something along those lines. It's all possible.
Correct.
So we could do funding. Let's say a group wanted to come together. Maybe that would be my next question. A group of Canadians, 3-4 people, want to pool their money together and say, listen, we want to start building a portfolio of rental properties here in I don't know, somewhere outside of Fort Lauderdale. It's wherever they find wherever you find a property that's going to give a good ROI.
Get something in the Everglades.
Nice. Whatever. I'll buy something on the moon as long as it gives me an ROI. I don't give a shit, right? So in this particular situation, where let's start with an individual, then we'll go to a group because that's probably going to be a lot different, right? But an individual comes in, they really want to use leverage here. Mm-hmm. They don't want to commit 30% down on a condo, but they have some great opportunities for, small 1-bedroom or even studio apartments, whatever you guys call them here, that look like they'll produce great rent. Mm-hmm. And they want to put down, I don't know, they want to put down nothing, but obviously that's not possible. But they want to put down a lot less than 30%. Okay. Not because they can't afford the 30%, but because they want more out of it. They're really looking at this from the perspective of a capitalist, right? What does that process look like from an individual or a couple, let's say?
Well, if it's it doesn't matter if it's an individual or if they're in a group in an LLC. If they want to give less than 25% down, they won't be able to do it. Because they're Canadian, because they're foreigners. So all the foreign programs requires that minimum investment of 25% down. There might be 1 or 2 banks in the U.S. that will lend to a foreigner with 20% down, but it'll be like getting a loan through RBC. Right? It's mental masturbation. You're gonna play around with them for like 30 days, 60 days, and at the end of the day, they're gonna tell you don't qualify.
Okay. So it's basically a pipe dream.
And even if you do, it's going to be like pulling teeth, right?
Yeah, it's not a process that most sellers are going to want to deal with anyways. Okay. Because he's got to negotiate with the guy to be able to give you the extra time on your contract.
Right. So it's basically an impossibility in that sense. You really need to have your 25%.
I don't like saying the word impossible, but you'd have to have somebody who'd lend you money like as a second mortgage. It would be some type of
private lending,
atypical financing that is not very common.
Even private lenders are going to want a significant equity position.
Private lenders are our third option.
They might even be like 30, 40%.
Okay. Yeah, I think now is a good time to talk about private lending. Do you want to get into that?
Yeah, let's get. I mean, you basically answered the question, right? So whether it's going to be a group of people together or a couple or an individual, it's really based on the fundamentals. 25 to 30% down, income to qualify. If you don't have income to qualify, we go to Plan B,
right?
Where you support it with the potential rents
correct.
Or the appraised rents. Or whatnot.
You're hired,
there.
bro. You got this.
There you go. I'm going to come to work in Miami.
Exactly.
Next
my preferred
week, right? I'm going to
Fired.
start underwriting all the mortgages, right? And then if all else fails and we need money from somewhere because a deal's not going to go through or you can't whatever it is, we can go possibly to private lending. Perfect segue.
Private lending has saved our ass and our clients' asses multiple times.
Okay.
So, for example,
we've saved some big deposits at the last minute.
Yeah, man, like $50,000, $100,000 deposits we've saved for people. So let's say, for example, you're a Canadian who's buying $1 million condo in cash, right? And something happens all of a sudden the day or the week before closing, and your cash is stuck, or you can't get it, or whatever it is happened. I don't remember what happened with the last client, but at the end of the day, like a week before closing, he's like, oh, his financing fell through. He was somebody else, and his lender was like, oh, just kidding.
No.
We're not going to
a
let
couple
you.
of scenarios, people thought they had more time.
And they didn't. And they were going to lose their entire deposit because they hadn't made a contract based on this financing that they promised Vito they had. And then at the end of the day, the lender pulled the rug out from under them. So we had no time. We had like 10 days to come up with like almost $1 million, and we got it done. Okay. And it's not even that expensive. So the closing costs are higher and the rate is higher. But there's something really cool. The rate is 1% a month. So it's 12% a year.
Okay.
But here's the cool thing. It's only interest.
Right.
So if you're paying interest only and you borrowed, I think this guy ended up borrowing like $750,000 at the last minute. His payment is only $7,500, which is the interest that he pays monthly until he either brings money from Canada, which he had and he was able to pay it off, or you refinance it into another one of the options. So this is like a Band-Aid loan. Yeah. And it's a loan that will take care of your financing no matter what your credit score is, how long you've been in the country. They don't really care because it's based on the equity. And they only require 30% down.
Okay.
Now, if you get 30% down, your closing costs are going to be higher because the lender is going to charge you not only the 12% a year rate, they're also going to ask for points from you.
Right.
On top of whatever the lender and all your closing costs are. So closing costs for these loans are typically 2 to 3% higher than every other option.
Okay. And that's to compensate an individual like you to close the deal, and then lawyers and people have to get compensated for structuring.
The lender themselves, they charge a fee. So they lend you at 12%. They also ask for points up front. That's how they make their money on these private loans. Now, me and Vito have negotiated something really amazing for our private clients. They only have to keep the loan for 6 months.
Okay.
Almost every private loan has like at least a 1-year prepayment penalty because they want to make that 12% interest up front.
Obviously.
But this lender, since we've sent them a lot of clients, for our Canadian clients, they're only going to charge them a 6-month period of interest. So that means anytime after you make 6 payments, you have no prepayment penalty and you can pay it off whenever you want.
These are really good on like fix and flips. If you find a piece
construction
of property,
loans,
because you can't walk in and get a construction loan, a traditional one, without having like plans in place, architectural drawings,
he knows,
budget,
appraisal
of the proposed property. Like you have to have all of that stuff, and that takes time. But these are deals, right?
Yeah.
You're gonna get something below market value or something that's just in high demand and competitive, and you want to go in and you want to make an offer that's like cash, no conditions.
Okay.
That's where you use this.
This is where we do no conditions.
Okay.
Or let's say
no
the property,
inspection, no appraisal, no, and they're still subject to appraisal.
Yes.
Right? So you can't do like a pure land play.
But hold on now.
You can. I've done land plays.
Okay, but the land's got to appraise.
The land has to
so
appraise.
let me work out the numbers.
The land isn't going to appraise.
Let me work out the numbers a little bit here. So let's say I want $1 million. Let's say I've got $300,000.
Right.
Whatever. 30% down. I need $1 million. And I'm like, listen, I want to like buy this particular property, and it is just perfect. It's just perfect for me, right? But if I get it appraised, it's not going to go, for whatever reason. I can't go with Plan A. Okay, and I want to really rip it apart and build a house like what you know.
Right.
People can't see what we're in right now, but it's a beautiful house, right? But it was done by you guys, right? Let's say I wanted it. Yeah. let's say I wanted to do something similar to that. I've got my 30% down, right? And I need bridge financing for a year, $1 million bucks. Okay, because I need construction, this, that, and the other. I know it's going to get appraised way higher once it's done. I could refinance, take care of it. So risk aside, okay, what am I looking at in terms of cost? So it's going to be 120 grand. So let's say 10 grand a month in terms of interest. So that's going to be a cost,
right?
And then the upfront costs. What is that going to work out to?
It's a regular closing cost that everybody else pays, except it's about 2% higher. That's it.
Okay.
So every 1% that you pay, let's say you're borrowing $1 million, 1% is $10,000.
Okay.
Yeah. So you'll have
$20,000
additional in closing cost than everybody else would.
Okay.
But other than that, everything is kind of the same.
150 grand then for the whole year.
And these
is a good budget.
Well, not for the year because you're including your interest with your closing costs.
Yeah. That's what I'm saying.
Oh, you mean when I take
out
the door?
Out
Okay,
the
I got
door, I'm borrowing $1 million bucks.
It's 20 grand over what a normal person would pay.
Which would probably be a few points, right?
Which
5
would
grand,
probably
10
be,
grand.
Yeah, 15 to 20 grand.
Okay,
anyways.
there you go.
So
$150, let's say.
about $150
Yeah,
or
you have your
$175.
standard, like your title insurance, all your
All
fees,
that crap.
your
Yeah.
appraisals,
Yeah.
your lead
You pay
searches, all your
insurance for a year up front.
Okay, so
all
then
those things are-
marginally $140 because all that stuff is a sunk cost. You have to do it anyways. You
have to do it anyways, correct.
On the margin, it's going to be 120 grand for the interest, let's say, and then 20 grand for the close,
For the
additional
points.
So $140, and I'm
Not really
pretty
$140
good.
because you'd still be
paying
paying a
obviously
rate,
rate
right?
You would still be paying a rate anyways.
At
Yeah, you're
plan
right,
A
you're right.
and in plan
So
B,
there's a
you're still paying either 7.5 or 8.5%.
So then maybe I'm out
What's
80
your
grand,
premium?
70 grand.
No,
Not even because it'll be 7-8% points.
Not
exactly.
even. Another
I'm out
thing is,
zero.
Zero,
points.
maybe 50 grand.
6 points. I'm out.
Yeah.
I'm out
It's
maybe
right,
6
No,
points.
and think about it. Like
Because I'm going to pay 8% anyways.
If you come across a really good opportunity and you get a lot, right? I work with a lot of developers, and you want to inventory that lot, and maybe you don't even want to build on it for a while, right? You grab it, you hold it, you sit on it for a year. Throw a tenant in it.
Yeah.
If it's livable.
Right.
That's where you'd use one of these, or you're just in a jam and you couldn't get the cash together at the last minute.
Yeah, or you could...
your financing
whatever
fell
it
through.
is.
Your accountant told you not to get a loan. This actually
Yeah,
happened.
you're not going to lose your deposit. It's like instead of losing a deposit
Right.
of 5-10%.
So I guess ultimately it's not the primary plan here. But
No,
I think
it's
it
a
could be a
Band-Aid.
good...
It's a fix.
Yeah, but it could be a good bridge loan if you
It's
are going to
primary
planning on building.
for an investor
Right?
for
So
building.
you don't have to rush to get plans together.
There's
right?
a gentleman right now who's asking us for a private loan. He's Canadian and he's going through a divorce. If he buys a property under anything that has his name on it, the wife or soon-to-be ex-wife will have claims to half of that money. So what he did was he's buying it with a private mortgage. It's not going to show up on his credit. He's not hiding the asset. He's telling her he's buying the asset through an
100%
LLC,
leverage, yeah.
and now all of a sudden she has no right to it. So the private money is actually saving him the asset. He's now going to be able to buy in Florida instead of having to wait till his divorce is over, which is brutal and taking forever.
Right, okay.
So that's where this comes in.
There's times where you have to pull the trigger on this sort of thing to solve a specific problem.
To solve a very specific
I guess that's
problem.
the overall point.
I think the overall arching point here is that no matter what happens, if you've got 30% down,
You're
you've
good to
got
go.
a house in Florida.
Yeah, like so. That,
Like,
I mean,
we can
that's
figure it out.
like if we can summarize this whole thing, it's yes, Canadians can definitely get financing here in Florida for personal use properties, hybrid use properties, or pure rental properties. It seems like a pretty straightforward proposition. Like it doesn't seem like it's any more difficult getting a mortgage here than in Canada. I've done many mortgages in Canada, and they're not easy, man. Like it's a lot of work.
Probably easier.
Yeah,
It
like
might be easier,
the few deals that I've been party to here in the US, they've been pretty smooth. So yes, it's possible. 25-30% down. Make sure you understand what the process is and what the appraised numbers are going to come to. Make sure that your realtor is buying you enough time with the conditions.
Correct.
And
Very important.
right? And if shit hits the fan, we can go private.
There's always a plan B.
Right? Okay. So awesome. Is there anything else you want to add?
Other than people think it's complicated to buy and it's not.
Yeah.
And the second thing is, and I'm going to say this again about Vito, having a team that already has experience in doing what it is that you're looking for is the smart play. For example, if you go to a realtor that doesn't usually deal with Canadians or whatever, he's not going to know the nuances and you're going to struggle. Also, if he sends the deal to a mortgage guy that doesn't do foreign nationals, that's where you're going to go into a nightmare scenario, because if you don't know how to do these things, even though from everything I've told you, I make it seem easy, it's because I've been doing it for 20-something years. I have the contacts at the banks, and I know who to call for every person. If you don't know that, then it's going to be like the struggle bus. It's not going to be pleasant.
So it's not a rate shopping situation here. Like, it's really, you should be...
You should go with somebody that knows what they're doing and can show you that they've done these deals in the past.
Right.
Like Vito says, he's vicious in protecting his buyer's deposits. His job is to protect his buyer and get him a good purchase. And part of that job is to put him together with a finance company that's not going to drop the ball.
Got it.
So the right team makes all the difference in the world when it comes to this.